now, what might change in the months ahead, and how the newly confirmed GST rebate could improve affordability, access, and demand for first-time homebuyers and those considering a home under 1.5 million. Whether you're considering resale, pre-sale, this session will give you a clear view of what's happening on the ground and what could mean for your next move. So just a quick heads up before we dive in, all mics are automatically muted. If you have questions or technical issues, please use the chat to message the hosts. Realtors will receive 1 PDP credit for attending the full session, and all attendees will be entered to win one of 3 High Street Shopping Center gift cards, 2 valued at $250 and 1 grand prize of $500. So to qualify, just stay with us through the full session and take part in the polls. Your participation helps us keep things interactive. So here's what we'll cover today. The current real estate market outlook, what's shifting now that the election is behind us, how the newly announced GST rebate is expected to impact buyer eligibility, affordability, and demand, real buyer scenarios showing how decisions today compare to waiting, a spotlight on High Street Village, Abbotsford's best-selling community, and finally a Q&A based on the thoughtful questions submitted in advance. So let's meet the panel that's going to guide us through the next hour. Ivan, let's start with you. Can you tell us a little bit about your background and what you'll be covering today?
Hi, good morning. Thanks everybody for joining in. My name is Ivan C. I'm a real estate lawyer. I've been practicing real estate law for well over 20 years. So many different governments have changed and policies have changed. I've been through it all and advising clients in all aspects of real estate, from purchasing, mortgaging, refinancing, partnership agreements, and even estate planning when it comes to a lot of people nowadays buying pre-sales for their children, and so estate planning as well. So all aspects of real estate I've been helping clients with. And today's topic, especially because of the projects coming up and policy changes that are happening, first-time buyers, what they should be looking for, expecting when it comes to closing costs, and policies that do change, how to anticipate them and what to do about them, and how to kind of approach them. So for those people who are trying to say, hey, I'm trying to hold off until we see what new changes that are coming down the pipes. Should we wait or should we not wait? Anyways, I'll be talking about those topics today.
Thank you so much, Ivan. We appreciate you being here. Cam, can you share a bit about your role and what you'll be focusing on today?
Hi everyone. My name is Cam. I'm a partner here at Thrive Mortgage. I've been in mortgage lending for the better half of about 12 years now. Today, just wanted to obviously the talking point from yesterday with the new GST announcement. So I'm going to be touching on that, what we're expecting that's going to do kind of going forward, as well as kind of helping people develop plans, whether they're first-time home buyers, whether they're investors, and just really help facilitate kind of what goes on behind the scenes to kind of help people navigate that mortgage landscape.
Perfect. Thank you so much. And Jamie, let's finish with you. What will you be sharing with us today?
Well, as president of Fifth Avenue Real Estate Marketing, I'm going to be talking a bit about the market, a big market update on that, what we've been seeing, what's happening, what we expect to see, especially with yesterday's big announcement on the GST. I've been working in this industry for well over 20 years now, so just using that experience and successes to guide through this. We see it as similar as the GST and the HST going in and out in the past.
Thanks so much, Jamie. All right, before we begin, we will just do a quick highlight and thank you to our sponsor, High Street Village, located in West Abbotsford. High Street is a 12-acre residential community with over 400 homes sold to date. We've got construction well underway with many families already moved in, developed by AB Wall and supported by a local team, Focus Architecture, Collaborative Design Group, J. Flores Construction, and Fifth Avenue Real Estate Marketing. High Street is located directly across from both High Street and Mount Lehman shopping centers and is just 5 minutes from Abbotsford International Airport, 15 minutes to the US border, and just under an hour to Vancouver. So let's start by zooming out to the broader picture. Jamie, March and April felt a little quieter than usual, but there was still a sense that people were watching closely. What were you seeing on your end?
Well, as a little hinted at just now, we kind of have seen very similar things that we've seen in previous cycles. So, being in the industry so long, we had GST. We've always had a first-time buyer rebate and no GST up to a price point of $350,000. Obviously, the market's changed since that was implemented. Our government's finally doing something about that and basically increasing the amount up to a $1 million threshold for first-time buyers. The old rules had a sliding scale of between $350 and $450. There was a rebate amount. You still paid some, but not the full GST. Now that's between $1 and $1.2 million. So we've just got to figure out all of the formulas due to yesterday's announcement and get that going. But I think it's something really exciting. Before all of this announcements that we heard yesterday, we actually saw something similar that we typically see in most elections, which was basically a pause in the market. People were still coming in, people are interested, people are asking great questions, trying to get educated, but the uncertainty of knowing whether they were, for example, going to have to pay GST or not, they couldn't pull the trigger to make that actual buying decision, which after today, there's going to be a lot more clarity on that. So again, it's a first-time buyer, no GST and rebate. And just watching everybody get re-engaged and coming back to that is what we're expecting to see in the next few weeks, just based on the activity we've seen over the months leading up to this announcement. We've had a lot of people coming into High Street and, quite frankly, other sales centers looking to buy, and that's been their biggest holdup is how is the GST going to work, which honestly nobody knew the answer to until the government announced it yesterday for us. So it's a very significant policy shift, and not because it reduces our upfront costs for eligible buyers, but it just removes a key source of hesitation, as I've mentioned. So we do expect to see that. There's still a buyer's market out there. There's some good deals to be had, but as we see less and less uncertainty, both on the political sector and the financial sector, that will start to disappear. So in BC, I like to say, if nobody's buying, nobody's buying. But when everybody's buying, and there's not a lot of in between. So how long your opportunity or this window of opportunity with things like GST included, if you're not a first-time buyer or other incentives happening out there, now is a good time to buy because, as I said, as all of the uncertainty disappears, it will come out. Our population is ever increasing. And we've actually had a holdup or a stop in new home supply. So soon the demand will outweigh supply again as the units that are out there start to be sold and taken off the market by regular buyers.
Great. Yeah. And now that the results are in, we have a bit more clarity in terms of where things are headed, at least politically. Jamie, how does that look, or how does that long-term demand factor into the market outlook?
So the long-term demand, I don't think it's really changed. CMHC forecasts over 485,000 new permanent residents to come in 2025 alone. Most are expected to settle in places like Metro Vancouver, the Fraser Valley, Greater Toronto. These are, top steady interprovincial and intraprovincial migration, and on top of that, into the suburban markets across BC, which are more affordable than, downtown Vancouver. At the same time, as just mentioned, supply continues to lag. Our multifamily housing starts are actually down 16% year over year in our province as of March. And this is from CMHC stats. Developers are actually holding back and waiting for the demand to be there for projects to make sense. That's because costs continue to rise despite the buyer's market out there. Municipal fees that can typically exceed $25,000 per home, adding to costs are escalating even higher and beyond that currently. Construction costs, they're being maintained. They go up and down, but there's a trade shortage. So they're not going down significantly. If anything, they'll start to increase as demand increases again. There's also tighter financing requirements based on what we're seeing with the tariffs and uncertainty and everything there, banking policy. So the banks that fund the developers, their construction loans are getting tighter, which means they're, things have to come into play and be proper, or it's not going to come to fruition. So if you don't meet your pre-sale benchmarks, they can't proceed with the project. If the projects don't proceed, there's no new inventory, and we have less supply, as we still have, almost 500,000 people coming in this year alone. what that sets up is a future window, probably likely in the next year to 2 years, say 2026 to 2028, where demand will start to run ahead of supply again, similar to what we saw in 2021, where we saw a bit of a back off rate when COVID hit, or like 2019, early 20, and then halfway through the COVID thing, demand skyrocketed, and we had that huge boom in 2021 from that pent-up demand. We're in the process of building that pent-up demand again. So we're likely to see something like that happen again.
Right. And as that demand builds, many buyers are wondering how to time their entry into the market. Jamie, what are you seeing in terms of current buyer sentiment and what could shift?
So at Fifth Avenue, we very closely track the buyer sentiment. We actually have a matrix. I'm not sure if you've got it up on the screen there for everybody, but it does summarize the share of potential buyers based on a willingness to act and belief in future prices. So basically, what you're going to see is a visual buyer sentiment positioning map with your X and Y axes there, where your X axis is your willing and able to act to not willing, able to act on the other end. And your Y axis, the vertical, that's your believes prices will likely decrease versus believes prices are likely to increase. And kind of giving you kind of a matrix and then which quadrant the potential prospect sits in. So we call them savvy early movers. Those are the ones that understand the market and can basically understand what I've just said and believe prices will rise in the long run, and they're ready, willing, and able to act today. Right below that, you have those that are waiting and watching. They think prices might go down. They can act, but they're hesitant just based on some uncertainty, so they're waiting. Then to the right, on the other side of the y-axis, you have the stuck in the cycle people. So they believe prices will rise, but they're still hesitant and or unprepared to buy. And right below that, you have out of reach. It's out of reach for them for now. Basically, they don't qualify. They still think prices might go down. They're very hesitant. They're unprepared. They might not have seen a mortgage. They don't know what they can afford. And they're not going to make a commitment anytime soon. They're not ready. So your current share of potential buyers are so about 10% are savvy early movers, 20% are stuck in the cycle, with 20% waiting and watching. And, as of before yesterday, about 50% out of reach for now. That might change a little bit, slightly due to the new GST announcement, might help a few people. But it does reflect the uncertainty that's still lingering in the early part of this year. Most buyers have remained very cautious or hesitant, with only 1 in 10 actively purchasing. The out of reach segment accounts for about half the market, which is a scenario representing a baseline sentiment, again, as I said, prior to the GST announcement as of yesterday, where we expect to see some changes over the coming weeks. So we have modeled 2 future buyer sentiment scenarios for this, with the next visual being, your anticipated market share or your modest policy impact. So with this one, we see the market shifting with about 30% moving to the savvy early movers quadrant, with 15% kind of stuck in the cycle, analysis paralysis kind of thing, and 15% waiting and watching, and maybe 40% out of reach. Meaning 10% more people will probably be able to make a move or afford if it was out of reach with the 50% prior to this announcement. So again, this reflects a very moderate shift using the GST rebate announcement from yesterday, and an increase almost in market from 10 to 30% for first-time home buyers actually being able to engage with this new change, and your out of reach declines from 50 to 40%. We have done a third visual for you. This is our optimistic scenario of where the policy change has a very strong impact on the market potentially, where we see potentially 40% of the market moving into the savvy early movers, and understanding what this means for them, and understanding this window of opportunity will most likely, it won't be there forever. It will most likely be small based on different cycles that we've seen throughout history, 2008, 2009 dip, and skyrocket, and the one I just mentioned that we went through right before and up to COVID, and the one that we're about to come out of again. So the waiting and watching, 15%, and only 30% for it being out of reach for now for them. basically opening the doors of home ownership to more and more people and making it easier for more and more people to own their own home. This would assume a very strong traction with the policy, with the adding the affordability boost to these people, which would potentially soften. And if interest rates go down, it would help them even more, which is why the percentages is going up there on how many more people can buy. Supply-sided policies try to stimulate construction as your savvy early movers going to 40% and out of reach drops to 30%, reflecting a broader market rebound, particularly among those previously that were sitting in the sidelines. So we do believe that this moment in time matters a lot right now. Buyers are that act now will have the most leverage. You can secure the incentives that are out there today that were out there last month before this announcement, if they're not ended, because most don't end on the spot, and have the benefit of saving the GST. You can select your preferred layout for new home sales as long earlier, the more selection and choice you have. You can probably select your color scheme, and you can lock in today's pricing when your completion's anywhere from 1, 2, or 3 years out. It's communities like High Street Village, which have visible construction, flexible deposits, and pricing that is well under 1.1 million that would be best positioned to benefit from this shift and create an opportunity for all of these buyers that potentially couldn't even afford a home prior. The longer completion allows them to also benefit from the price appreciation we anticipate seeing over the next year or two prior to them completing, meaning their home will be worth more than they paid for it by the time before they make their first mortgage payment. So what they offer today, a buyer just needs confidence, flexibility, and value, and the ability to complete on a home when they're ready, and try to get a mortgage approval while you're in your 7-day right of rescission and wait to, a couple of years for completion.
Thanks so much, Jamie. It sounds like there's a lot of opportunity out there right now. Cam, I'm going to flip over to you. Are you seeing any renewed interest reflected in mortgage conversations on your end?
Yeah, we're starting to see more and more, and we're really trying to educate and highlight the importance of getting that pre-approval, because with that pre-approval, it has the potential to lock in a 120-day rate guarantee. And in these times, we're starting to see more and more uncertainty with rates, the volatility in the bond markets. Rates are changing daily. So with that being said, usually our advice to clients is come to us ahead of time, get pre-approved, lock that rate in. What a lot of clients tend to lean towards is they tend to think that if they lock that rate in, that's their rate and nothing's going to change. What we actually have the ability to do with a lot of our lending partners is, let's say someone locked in a rate today, we have the ability to negotiate that rate right up until about 1 to 2 weeks before that closing date. So the rate they lock in today, if they're closing within 120 days, is going to be worst case scenario for them. And then if there's any reductions between now and that completion date, we can just update the rate with the lender and guarantee them the lower of the two rates, just to kind of put their mind at ease and help them understand that is still an option for them. The longest time we were seeing people come to us, accept an offer in hand, and then they're in a complete scramble trying to make it work. Where if they come to us ahead of time, get that pre-approval in place as they approach you guys to make their offer, it's just a much more streamlined process. They're qualified buyers, they know what they want, and then they also have the leverage to be able to dictate what they want and exactly ask for what they want. So yeah, we're starting to see more and more people kind of come to us on the pre-approval side and really just trying to push people to do that because it just helps so much.
Yeah, great. And then for those who need more time to prepare, Cam, would you say pre-sale offers that kind of flexibility?
It really does, because sometimes there is a pretty extended completion date depending on when they're looking to buy that. So during that time, although they're pre-approved, they can use that to kind of put themselves in a stronger financial situation where they can pay down debt, they can improve their credit score, they can save money for their down payment. And even though, let's say we had them approved with 10% down, if they're able to save up more money, we could just flip that approval to 15% down or 20% down, lowering their monthly payment, potentially getting them a better interest rate at the same time. It just allows them the flexibility to do so. And during that time, if, like I said prior, if rates come down, they have the ability to take advantage of those lower rates. So it does help quite a bit.
Thanks so much. I'm going to switch over to you, Jamie. There's been a lot of conversation around oversupply in the market. Is that what you are seeing in the presale segment?
Exactly. There are some analytical firms out there. There's many of them, but some are reporting up to over 15,000 unsold units in the market, which suggests a 23 to 31 months of inventory. In reality, that's most likely very overstated. A lot of developers out there are actually holding back on disclosing how many sales they have or have already made until they can frame a strong momentum message to the market. And once they come out framing that, I mean, the great selection will be done and gone, and then those months of inventory will be removed off the market once that's claimed or stated. While the broader market may look a little bit soft on paper, there are projects that are quietly gaining traction, particularly in areas that offer tangible value and near-term delivery, so a quicker completion date, essentially.
Yeah, so it's not that people aren't buying, it's that they're being more selective then.
Yeah, that's right. And geography plays a huge role. We're seeing a clear pattern south of the Fraser River in areas like Surrey, Langley, and Abbotsford. Homes under 1 million with family-friendly layouts, incentives, and visible construction, like where they know the homes are actually going to be built, are actually selling. But north of the Fraser, where some projects are priced well over like the 1.1 or $1,100 a per square foot, and are completing years out from now, buyers are more hesitant in those markets, which is why projects such as High Street Village are very well positioned. You have construction progress buyers can see. We have townhomes completing. We have condo buildings completing. We have condo buildings under construction, and those are the ones where you can get more flexible deposit options. You want to make sure you have a good developer reputation, such as AB Wall, so you can plan and buy with confidence. And those are really the ingredients today's buyers are responding to.
Yeah, for sure. Jamie, in terms of multifamily housing project starts, are they keeping pace with the demand that we're seeing?
So the multi-family housing project starts are actually down year over year, putting further strain on the future inventory we see coming based on all of the changes and where we're at. Nationally or across the country, starts have dropped by 14% compared to early 2024, where in BC on its own, we've actually declined 16% as of March 2025, but we're in one of the most areas of demand to move to. So looking at national stats compared to BC stats or even Lower Mainland and Fraser Valley stats don't make sense a lot of time because we are not the norm of the national. If anything, we're the ones that create the variance in those averages, probably along with Metro Toronto. Material, labor, municipal cost increases have made some projects financially unviable right now, which is going to put a further strain on inventory. Compounded cost increases from tariffs, minimum wage hikes, local development fees, the constant increase in DCCs are making projects harder and harder to fund and deliver. Several developments that are on pause have gone on pause, and others have even been canceled altogether already because of this. Again, putting more strain on that supply, which means prices could go up a bit faster with notable change in policy and financial jurisdictions there. Although January saw a notable increase in new and multifamily home registrations, it was up 135% compared to the same time last year. These represent what we call early pipeline activity. They're not homes that are going to be ready anytime soon, meaning available new supply over the next 12 to 24 months will remain tight, especially under the $1 million price point in the multifamily segment. Demand stimulating policy, we've just had a demand stimulating policy such as the GST. There should be some more to come. And if we can get city approvals to move faster or lower costs, or even add to the development investment and land and stuff like that, we could see more more medium to long term, and this will take years to actually come to fruition and show.
Okay, and to you again, Jamie, does that mean we'll see a lag in available housing even if policies are introduced soon?
Exactly. So many developers that have paused due to all of this uncertainty are units that, the city was hoping or approved. They're at third reading, but they're not coming to market yet just because the project's not viable. So absolutely. So many new housing policies focus on the rental or publicly funded housing. They don't actually focus on ownership, which will do little to improve supply for actual buyers.
Okay, and what would you say then, Jamie, is the takeaway for someone waiting for the perfect time to buy?
So I actually think waiting is going to actually cost you, especially right now. I feel this is the bottom, it's bottomed out. So you could end up paying significantly more for the same home you're looking at today. So, for example, one scenario, first-time buyers, you're looking at, say, a two-bedroom pre-sale listed at, let's say, 649.9. If demand rises after the GST exemption that was just announced, which could take a week or two or a month to see this happen, but pricing on that same plan might increase by $5,000 to $50,000, not including the potential loss of current incentives that might be available on that plan could also be taken. So now that buyer may now need to stretch your budget or increase your down payment, or settle for a less desirable floor plan that you didn't want in the end because you decided to wait. You'll lose access to value buyer incentives. So basically, as demand increases and the supply is shrinking, it will slowly shift from a buyer's market to a balanced market, and as we see in BC, quickly become a seller's market. We don't usually have a balanced market in BC. It's either a buyer's or a seller's. As I said, there's not much in between. Everybody just kind of does the same thing quite quickly, as seen in at least the 4 to 5 cycles I've seen in my career so far. So what you'll end up doing is just losing access to the incentives with increased pricing. But if you're a first-time buyer, you'll still save the GST, but you're not saving as much as you could have saved because the price went up. You could have got the GST and an incentive, and now you're paying a higher price and just getting the GST because we decided to wait. You'll also have fewer homes to choose from. So another example would be, say you find the perfect home that you want. You love it, but you decide to delay. You're just in that analysis paralysis. Let's hesitate. Let's wait and see. But when you come back, now that floor plan's sold out and only a less desirable home or one without a view or not the one you fell in love with is all that's left. But now you still want to buy because you have fear of missing out because there's barely anything left and the other projects are selling. So now you're going to pay more for something that wasn't even your first choice. You're also going to face more competition as the market improves and more people basically come off the sidelines. Once all these announcements are completed and made and fully laid out. So as there's more competition coming in, you could also all of a sudden see us going back into multiple offer situations like we saw a couple of years ago. And finding that you need to make a decision whether you're going to buy in 24 to 48 hours or less or on the spot so you don't lose the home you want, and forcing yourself into a pressure sale when, now and last month you had time to figure it out. You're also going to miss on potential equity growth. So as mentioned, if you're buying today and your home doesn't complete for a few years, that's equity growth. Or if you're going to buy something that is ready to move in today, it's valued today and it's going to have equity growth after you move in. But using a conservative 4% annual increase based on historical trends we've seen, a $600,000 condo today could be worth around $675,000 by the time it completes in 2028. That's $75,000 in equity gain simply by locking in at today's pricing and paying a deposit and doing your deal today. Buyers who wait, you're going to be paying that future price while early purchasers walk into a completed home that's already worth more than they paid, so they get that value in the home as opposed to developers selling it at that price closer to completion because it's market value and it's worth what it's worth today. So if there's a visual there on that, I think you can see equity gained over, say, 5 years at let's just say 2%, price annually, and take a look at that and how that can play out for somebody over the years. So, and how much money they make. So even if you bought this year and, and it was a small 2% increase, you're still making $12,000 year over year. If your completion's 3 years out, that's almost 36. And the example I just gave with the higher numbers I said is double at 4%. We don't know what it's going to be, but traditionally in BC, once it takes off, it goes up fast. So it will probably be faster than the 2% just based on historic market cycles.
Thanks so much, Jamie. I appreciate your insight on that. Over to you, Ivan. You've helped a lot of buyers navigate policy shifts over the years. Does this line up with what you're seeing on your end?
Yeah, so as you heard from Cam and Jamie so far, a lot of the things that you see is unpredictability. Things change all the time. the landscape, the laws, the government policies, the incentives, they all change. But what I tell clients at the time in which you're thinking of buying, you're able to buy, you've got the mortgage from CAM, or from you've got the pre-approval of the mortgage. If you look at the situation of the project you're thinking of buying, um, uh, one of the things that comes up is you see development happening, as Jamie was mentioning. It's starting to build. There's projects. There's building happening. A lot of projects that you don't that doesn't even get off the ground, and they have to start from scratch. And then there's unpredictability everywhere. But what you try to see, look at the landscape. What are you able to buy? What can you afford? And what are the chances now that everything will change in a year from now? So unpredictability is everywhere. What you see now is what you can get, and what you can look at the landscape and see if you can buy. So, for example, you mentioned about the new GST changes that just came. One thing I want to say is government is usually not proactive. They're always reactive. And by the time you get to the point where, oh, hey, we got a deal, you know how long it took for them to get a GST rebate for home buyers? And then as market goes up and then they get, hey, look, prices are going like crazy. They're going up. We've got to put some brakes to it all. And then all of a sudden you lose everything that you have. It's always reactive. So when you have a good thing going now, it's a good time to take advantage of whatever you can get if it's good. You have the GST incentives that was just announced yesterday. It might be gone, and who knows, maybe a different government election cycle will be all gone again, right? Or the market heats up, and all of a sudden, hey, we've got to put a brake on it because its buying pressures go up, and then prices go up, and then some buyers are left out of the market. That 50% that Jamie was mentioning on hers goes up to 70, right? So anyways, yeah, so that's one thing.
Thank you so much, Ivan. Back to you, Cam. What does the new policy actually mean for buyers?
Sorry, I was just muted there. So yeah, GST is one of the few things that actually lenders allow people to finance in their mortgage. So that 5% leading up to yesterday would just get built into the purchase price. So like cash out of pocket, it's not a huge change just because based off their down payment, it's not a lot's going to change there. However, where we do see it really impacting people is on a monthly payment and more so on the qualification side of things. Without having to add that into the purchase price, they're going to be able to qualify for a bit more, as well as their mortgage payments are going to be a bit less for the same property that they would have been buying 2 days ago. As Ivan and Jamie were mentioning, it's really some of the trends that we've been seeing over these last six months to a year is a lot of people that are fully qualified, ready to buy, and they're just waiting. And what they're waiting for is different events that are going to happen. So interest rates are supposed to come down. We're going to wait to see what happens. Federal elections coming up. We're going to wait to see what happens. With that, the longer you wait, things change. When something like this happens with the government announcing that GST rebate yesterday, where people will really see the gain is the people that act quickly, where people that won't see as much of the benefit from it are the people that's going to wait. So if you wait 3, 4, 5 months to see kind of what happens with it, all those people that are going to react now have the better potential of getting better deals on what they're buying, because it does have the potential to continue to drive prices up. And then with that, similar to Ivan said, if all of a sudden the government sees the market getting out of control, prices are going through the roof, they're then going to have to step in to see what they can do to lower pricing. And again, although they promise they're going to keep it out till, I think they said 2031, at the same time, they could change their mind tomorrow. So where we really see it impacting buyers are the people that act quickly, just so they can take advantage of essentially the low prices before things start to change and people start to get involved and drive those prices up and up and up.
Thanks so much, Cam. We appreciate it. Over to you, Ivan. If a buyer purchases a home now and new government incentives are introduced later, do they have any recourse or ability to renegotiate?
Quite often, just give an example about the GST incentive that came. It applies as of May 27th onwards. It doesn't apply retroactively to those that people that bought before. So if you take advantage of it now, and then the government may change the policy, and then it may move the stick, the qualification stick, but it may change it. But those that bought before May 27th are not gonna get this incentive. So first of all, when the timing comes and there is an incentive, it's the time to take advantage of that incentive, because it may be gone again. So that's one example. Now, one thing I want to talk about, if you can put up my screen, I don't know if you're able to, I have a screenshot of a presentation. You can put it there. Now, I put this here because it got changed yesterday because of look at all the different things that could happen in a pre-sale. Not only are you buying something that may happen later in the future, some buyer may actually buy an assignment. So all the projects are sold, but it's not finished building, and you might buy an assignment. That for that GST the rebate does not apply to any assignments that happened before May 27th, 2025 either. So now if you buy an assignment, you have that advantage. You save the GST. If you look at my screen, I give an example of a price. And one of the things that I just want to bring up since I'm talking about this slide is the price point. You know, like if you have some of the bigger projects and more expensive projects, these exemptions don't apply. This GST thing is a maximum of 1.5 before any rebate happens. But the maximum rebate you can get if it's up to 1 million. So, and it's 1% extra less as you go over 1 million. So you pay 1% GST if it's 1.1. If it's 1.2, you pay 2% GST. Up to 1.5, you pay the full 5%. So you look at all the numbers that I put down here in terms of now, this is what you can get. And you know, if you bought the day before yesterday, you would have paid 62,500 if you bought an assignment based on the scenario that I'm pressing up here. But you buy today, you're paying 26,005. Look at that, just because of a day. So the idea that I want to point out here is all these things apply. Right now, you see like 1, 2, 3, 4, 5, 6, 7, 8, 9 types of taxes. And they may or may not all apply. And things change all the time, right? So, you know, this is what the scenario that everybody is looking at. Another example I wanted to talk about was about the flipping tax. You know, there was a federal one that existed for a long time. And then if you bought a house and you sold it within a year, okay, well then you pay the gain between the two of what you bought and what you sell as if it was like income. But then all of a sudden, a year later, the BC flipping tax came about because they're all trying to reduce the kind of a market that was happening probably five years ago, all of a sudden happening. And then you have a 2-year time limitation to flip the property and then pay tax, and you have to wait 3 years if you want to do it as an investment. You see how all these things change. You wait a year, all of a sudden you get the BC flipping tax. If you did it only that first year, you would have only dealt with a federal one. So, you know, right now we have GST, but there could be provincial and city that might get into this whole policy change as well. So it's not just the federal, but all the other governments might want to get in the act. So, you know, in this list that I have, the capital gains tax, there was a proposal last year. Fortunately, they backed down. The government that changed has not approved the previous announcements of that, which is great, but you just never know. Then the property transfer tax, it was there's a Vancouver empty homes tax, BC spec tax, the federal and BC flipping tax, and the underused home tax. A lot of different things. There's 3 things I want to say about taxes normally. Like you have an existing exemption that gets either for the most part, the exemptions gets closed off as supply and demand changes and prices increase. The previous ways to be exempt gets lowered or disappears, or a brand new tax gets imposed, and they become retroactive quite often as well. So, you know, a lot of stuff to look after.
Thanks so much. I think you covered some of this, but on the topic of risk, what would you say are the risks waiting for new government programs that haven't been finalized?
Yeah, you know, for me, it's like as I mentioned before, government's always reacting to a market. So at this present stage at the market where there's a lot more supply than there is demand, it may be counterintuitive in the sense that, hey, look, everybody wants to buy something. That's probably not the right time to go do it. The time is when the market is in a situation and waiting for things to happen, or on a downwards, where the demand is not as high as the supply. This is the time to buy. So you know, and you take advantage of what available incentives that are out there, because there's developers that are trying to, have incentives for buyers to get into the market. And because of this GST, there's incentives. The time is when it's good. when the prices are going down and the market is less pressure. This is the best time. You can't predict the future, and quite often, by the time it gets really heated up, government changes their policy, and then you get higher taxes, less abilities to be exempt. One big example is the BC anti-flipping tax. They have a built-in regulations that says as cities become bigger, they're going to start including that into this the taxing regime. So, over the years, maybe Squamish will eventually be part of it. Tsawwassen may be part of it, but because they're not that big yet. So, taxes are meant to look at these things and react. So if there's an exemption now, the time is now to take advantage of it. So.
Yeah, yeah, for sure. So what would you say buyers should be aware of when reviewing contracts during a time of political or policy change?
Well, for me, on behalf of all my clients, and if they have a contract coming through, quite often, I get the contracts and the review and help the clients purchase, knowing what the landscape of all the laws are. But having a review of the contract before completion or during the rescission period is important, so that you can see ahead of time as much as you can what to prepare for. For example, if the expected completion date is 4 years, what is the client's particular status of their job or their life, and are they going to get a new job? Are they plan to move somewhere? Do they have a certain time frame where they're going to switch from a full-time job to self-employment? You got to look at future abilities to react. The money part is really, really important. That you need to have the cash. Pre-approvals is so important, but a lot of things may change from the time you buy until the time you sign the pre-sale contract until the completion. So there's a lot of things to look into it. But legally, there is legal abilities for clients, of course, to when buying pre-sales to back out. You want to look at the contract itself and review it to see if the terms are what the buyer really wants. So.
Thank you so much, Ivan. So even with new policies taking effect, it sounds like the best strategy is to make decisions based on what's active now, work with legal and financial experts to make smart, informed choices.
Yes, exactly.
Yeah. We're going to switch over quickly now, and we're excited to share a bit of information on High Street Village. We're excited to share that Building 6 at High Street Village in West Abbotsford has just launched, along with the final release of townhomes, a major milestone for this growing community. In response to the new federal GST rebate policy announced just yesterday, we're also rolling out a special buyer incentive. As a thank you for joining today's webinar, you'll get access to this promotion 24 hours before it goes public. It's our way of helping you take advantage of this new opportunity with confidence and priority access. We're also going to be releasing a brand new 3-bedroom condo plan in the coming weeks, offering even more options for buyers and your clients, for growing households and users looking for flexible space. So if you have any questions or want to explore your options further, we'd love to connect with you after today's session. Moving on to Cam again. What are some ways first-time buyers are getting into the market without waiting for new government policies?
We're starting to see more and more people get creative kind of with where their down payment's coming from, because typically the biggest sticking point we see is down payment and people saving up enough to be able to afford that either deposit or down payment on that first home. So we're starting to see people take advantage of the incentives and programs that are available through the builder, such as the Equity Edge program that you guys offer. In addition to that, we're still seeing quite a few clients get help from their parents. Or potentially even looking to add someone to co-sign on that to kind of help offset the cost. So more and more clients buying with friends, more and more people buying with family, just because they're a little priced out based off their income. They can't afford it, nor does the bank allow them to qualify for it. So looking to add someone to kind of help offset those costs, or potentially look to bring someone in to rent one of the bedrooms or something along those lines. But yeah, I would say more and more so just relying on incentives and programs that are available.
Appreciate that. And to the Equity Edge program, can you explain how that actually works and who it's best suited for?
So it's actually suited for quite a few different buyers. Like if we look at from a first-time home buyer, I would say mainly best suited for them, where they're coming Take an example of someone that just graduated university. They have a bit of student debts. They're working on paying that off. However, they're thrown right into their career and they now have the income to qualify for the mortgage. That person who was just in school, chances are, doesn't have a big enough savings account to afford the down payment. So what they're doing is focusing on paying down their debt. They have the income to qualify. So that bond program's pretty much perfectly fit for someone like that because it helps offset some of that cost, as well as give them time to save money right up until that completion date. When looking at someone that's an investor that's buying and selling rental properties all the time, what it allows them to do is potentially not have to liquidate their investments early on. They can rely on that Equity Edge program to essentially use that as part of their deposit, keep their money invested, keep their money where it is, and then not have to pull it out till completion. So it just helps offset some of the costs, whether it's from the investing standpoint or the down payment standpoint. But we're starting to see what it's becoming very, very popular with more and more buyers, just really to help offset that initial shock of that deposit they have to pay.
Thanks so much, Cam. Back over to you, Ivan. If someone's buying with a family or getting help from parents, what legal considerations should they keep in mind?
Yes, as Cam was mentioning, there's a lot of people who are priced out and needing more people and more of their financial resources to buy. So, and quite often there's two scenarios. One where it's like family members are helping children buy, or brothers and sisters buying together, or it could be two partners who have two separate families or more that are doing this like a joint venture, like a partnership. So in each of these situations, it's very, very important to have a good, it doesn't matter if it's family or not family, it's to have a good co-ownership agreement, because differences will come up in terms of how they contribute to the maintenance of the house. If someone wants to leave the home and not participate or live in the home, if they, one of the things to me, and Cam would also advise about this with any mortgage, is that every person on title who gets some property who's on the mortgage is liable for 100% of the mortgage. It's not like, hey, I'm only 1/4 of the home and I'm on the mortgage, I'm only liable for 1/4 of the mortgage. It is not. Everybody is 100% liable. So it's important to have what to do if one of the parties of the owners can't contribute to their payment. If they are lacking behind and they need more time to pay, and the other ones have to cover them, you need a good agreement that covers it all. And one other thing, because I do wills and estates as well, when it comes to family members having it, there's all these other issues that come up. Entitlements because of spouses, and because entitlement because of the wills, estates Succession Act, and children who think that they're getting an advancement of their inheritance. And is this something they're getting as a gift, or is it something that they're expecting if the parents pass away and then they get it, it's theirs? All of these issues should be looked into prior to buying. And especially, if they don't, because of the timing, get it done at some point to make sure all the rights and responsibilities of everybody is covered. One of the things, if you do a little brief purview of the court cases that are happening because of joint partners not agreeing on everything, it's just like a vast majority of the legal disputes are because of that. And so to avoid that, get a good agreement before anything happens.
Perfect. Appreciate that. And to you again, Ivan, are there legal risks or limits to flipping a presale in 2025? Can you speak to that?
Yeah, I mentioned briefly about, and that's a screenshot that I had up. You had the BC flipping tax and the federal one. The one thing that's really important to know is that the federal one, if you buy and you sell 1 year within 1 year of the purchase, and then you sell it in that year, the increase of any amounts that you have that's above what you bought for is considered business income. It's like personal income. So in this example that I give, like if you make a certain profit, is added to your total income, and you're taxed at the marginal tax bracket that your total income is for that particular year. It's not like a capital gains where you take 50% of it and then you add it to your income, and then you see the tax bracket. It's a total gain. There are ways in which to be exempt, and calculations, and an accountant should help you advise exactly how much you pay, but it's still a lot. So be careful about that part. And for the BC one, it's a 2-year thing. So it's not a 1-year thing. So if you want to avoid it altogether, at least wait a minimum of 2 years before selling it again. So, and there's, the presumption is if anywhere within the 2 years you sell it after you're buying, you're presumed to have been doing it for a business purpose, like an investment, rather than your principal residence. There are exemptions, work relocation, a death of the family, a divorce, these other things, but they're very technical, and you don't want to plan for those type of events to happen. So.
Yeah, I appreciate that. And lastly, could you cover what legal costs should buyers budget for closing a pre-sale home in 2025?
Yeah, I would put the category in terms of 7 different items to make sure that you cover for it. So when you do your advanced budgeting and you talk with your mortgage broker as well, and it's really good that GST is included, and because of these exemptions, you can have more to buy, more to borrow, and you can have less payments over time. But one of the things is the legal cost when it comes to doing the actual transfer. So you look anywhere from 1,000 to 1,500. It goes on average around. You have the property transfer tax. Now there are exemptions. So of course, $1.1 million PTT exemption if you're a first-time buyer, which is nice. Anything over it, then you have to look at 1% of the first 200, 2% of the rest, and 3% over 3 million, which allows for the high street project here. Is quite within the limits where you can get almost a full exemption on the property transfer tax. And the thing to note about the property transfer tax is based on the gross, the net amount. So you have a price, you back out the GST if you had a price like that, and then you calculate the PTT on that. And then there's the GST, which given this scenario right now with the new policies, it's pretty good. So, anything over a million, 1.1 is 1%, 1.2 goes up to 1.5 million, and then therefore there's no rebate after that. And then you look at adjustments, like there's property taxes and strata fees. So you have to look for that. Like, if the project happened before the whole the whole project is taxed, quite often the developer will pay it up front, and then the buyer would have to pay back their portion starting from the day they take the keys till the end of the year. So account for that. Yeah, you might want to think about an appraisal. If you're getting the banks often require an appraisal before they prove exactly how much they want to borrow, and usually there's a cost for that appraisal. And then one thing that's happened nowadays, if you're getting a mortgage, is this title insurance. It's another thing that can go anywhere from a couple hundred for stratas to up to 1,000 when it comes to detached homes. The title insurance is separate than property insurance for protection against fire and earthquake. It's protection against fraud. And now, invariably, every single lender now requires it as part of the purchase, and the buyer or has to pay it to protect against fraud and misrepresentation. So that's the kind of landscape when it comes to the closing costs.
Thank you so much. So whether it's co-ownership, deposit assistance, or navigating closing costs, there are real pathways for buyers to step in confidently, especially in projects with strong construction progress and flexible programs already in place. As we move on, we've had some thoughtful questions come in ahead of today's session, and I want to take a moment to address a few of the most common ones before we wrap up. This one will be to you, Cam. Now that the GST rebate for first-time buyers is in effect, should I act now or wait?
Similar to what I said earlier, my stance would be to act now. The sooner you can act, if you could take advantage before other buyers. Again, the more people that buy, the quicker it's going to drive prices up. So, I mean, waiting can end up just costing you more money. So by buying now, you take advantage of that exemption that just came out yesterday as well. And as in addition to that, you're buying it at an appropriate price, not overpaid just based off a bunch of people driving the price up, trying to buy at the same time as you.
Appreciate that. And Ivan, I think you've covered a lot of this, but what happens if I buy now and the government announces new incentives afterwards?
Quite often the incentives take effect at the time they announce it. So, for example, the GST one is a perfect example. Only people who buy after May 27th is able to take advantage of that. So, and it didn't go back to those who had paid before, is not able to go and apply, say, hey, can I get some money back? It doesn't happen quite often. So quite often taxes go up, exemptions get down, or loopholes get down. If you have an exemption, take advantage of it because it may be gone pretty soon. So you can't predict, but that's all you can do right now. So.
Thank you so much. And Jamie, is now still a good time to buy even with so much changing?
Absolutely. I think we're all hinting at kind of the same thing. And I think to simplify what we're saying is the market has been down and it's probably going to go up soon. So the old adage of buy low, sell high that you put, it goes for real estate, goes for stocks, kind of goes with anything you want to invest in. The best time to get in is when the market's low and before everybody else is buying, because when there's a bit of a frenzy, you're not going to be getting the best deal possible, which means you're not going to get the most appreciation for yourself as possible. The other side's getting it. You want to look at stuff that's really in a good location, long-term value, such as High Street Village, on transit, easy access to the highway, steps to everything you need for shopping, services, close to schools, parks, all of those things, and keep going that way. So if you look at the screen, you can see what typically happens when we hit moments like we're in right now, whether it was 2009, as mentioned earlier, 2016 post-elections, or even the early stages as the market took off for 2021. Each time the buyer sentiment rebounded, the prices climbed or escalated fast. So those that waited lost out every time. And again, it's a repetitive cycle in BC, and it's been a cycle even longer than I've been in the industry studying the cycles and the several cycles that I've been through myself. So once you know the cycle and when to get in, that's when you should be taking advantage of the cycle. Those that wait miss out is typically how it works.
Yeah, for sure. Thank you so much, Jamie. And Ivan, one more question for you. If one of the purchasers on a contract is not a first-time home buyer, how will that work?
Quite often when the exemptions that are available, they do have it for those that those who are eligible will take advantage of, those who are not is not able to take advantage of it. So it's just the way it is. But if you do it as a group, then you can spread the savings amongst the group of people that are buying. So, you have 3 people who are brand new buyers and they can take advantage of the exemptions, but one person can. But you need that 4th person, because otherwise you don't have his credit or his money and you couldn't buy otherwise. So you just split the benefit across everybody and just make sure everybody has good agreement to say that, hey, just because, you didn't put down as much money and you got good credit, and then you because of you made us pay more taxes, but because of me, you could even buy a place in the first place. You need a good agreement to take care of all those potential discrepancies and fighting that could happen.
Appreciate that. And then if a buyer buys a home, say, for example, this June, it doesn't complete until 2027, and the policy gets peeled back before completion. I think you did speak to this as well, but if you can allude to what will happen in that scenario.
Yeah, so sometimes you can only take care of what you can do when you can do it now. An example may be like when it comes to if you wait long enough, let's just say, it took a long time for these new exemptions for the first-time home buyers to come. I've been practicing for a long time. When was, the 200,000 first 1% of the first 200 is still there. And then they've added 3% on top of 2 million for the property transfer tax after 20 years. How long do you have to wait before exemptions come? So, you can only do what you can now. You can't predict ahead of time. You just predict and protect. Now, one of the things I want to build in at the time of buying is that if you want to assign a deal and you can't afford it later on, you try to get some assignment rights so that you have backup plans, plan A, plan B. And that's why it's good to, before you buy, have a good plan in place, including money and financing, but a legal plan when it comes to backup plans for buying. Other people who have better credit, people who have more money, you can't borrow, then how much money you're going to get from someone else, and have a plan A, plan B, maybe plan C and D.
Thanks so much. All right, and to close us out, I wanted to just kind of wrap up with a few key takeaways from today's discussion. Essentially, now is a smart time to buy. You'll get the best pricing, incentives, and selection before any potential competition heats up. Supply is shrinking while demand grows. With housing starts down and population growth, prices are set to rise. Federal policies may trigger a buying surge, so any incentives could spark demand and shrink your buying window. And lastly, pre-sales give time and security. So locking in today's price while gaining flexibility to save and plan in a good development. And as we wrap up, I want to thank you all again for spending this hour with us, and a special thanks to our panelists for the incredible insights. If you have more questions and want to take a closer look at available homes at High Street Village, we're ready to start the process. We'd love to help. We'll be in touch with the winners of today's draw, and realtors, don't forget your PDP credit certificate will be issued after today's session. So everyone have a great afternoon, and we hope to see you again soon. Thank you.